Hello, guys, and good evening. Sunday here. We have to do it. We have to look through, Twitter, what charts we have there to show you what I found during the weekend. And yeah, as always, join the community on Substack, where we try to find the best entries for gold and silver, platinum, various commodities. So yeah, let's check it out here, what the lovely people have to say here on Twitter that most of them I follow. Some of them I just, found by accident, you can say. So here we have Piers, which is ECB cut rates by 25%. That was 3 days ago. Last occasions when interest rate cycle turned was with the first cut versus Euro SOXX 50 index. So what he's trying to show here is basically that when we get the rate cuts, as you can see here, let's make it bigger. When we get the rate cuts, that's also a somewhat of a good indicator that is also the top in the cycle, or in the commodities, in the euro at that point in time. I think it will be no different when they cut rates in USA. That will be the peak of the stock market. So high correlation there, and we shall see how low it goes. Last time we went to 0, and again, the markets right now are very different with regarding to the size of the bond markets, high rates, a lot of different things compared to over here, actually, in 2008. As you can see here, in 2008, you had the rate cuts and the market completely collapsed. We had this huge, mega bear market, global recession. Again, will this time be different? I think it's different this time around, given over here we have straight out deflation. Not good. Here we have inflation. I think will remain high, but I also think that the markets, the economy will stagnate. So we will have stagflation, meaning that inflation will, be higher or outperform the gains, the good gains that you will see from the global markets. So very interesting correlation right there. Patrick, Karim, my good man, gold versus SPX, the quarterly charts, you can clearly see here that I also think actually we could be here. Maybe it's a bit early. Maybe we are here again. A bit difficult to say, but what he's saying is that the precious metals complex bull era has not even started yet. And Patrick Karim here says the precious metals complex bull era has not even started yet, no matter what the price of gold or silver currently is. So yeah, still very early. So basically here you can see that gold is not yet outperforming the SPX, and we need to get above, in his view here, we need to get above the 3-year moving average. So definitely trying to go a bit more sideways here, but we haven't really turned up yet. We have no, big higher highs or any higher low just yet here. But I agree here that gold will be a better performer than the overall markets for a long time. That's gold. Next big trade, TAN here. We talked about TAN on the Substack. The TAN looked really, really good. And I think I have also posted some charts on Twitter where you can see that. I think TAN, this pop here was a huge tell, in my opinion, that we are going to see higher prices for TAN. That's solar. So again, energy is catching a bit here. TAN, lowest volume after the breakout yesterday. So you can see we have the breakout with volume going sideways, volume declining. That's good. Again, I like TAN here. I really do, especially on a log scale. Going back a few years, looks great. Gold predictor here. Gold remains within choppy price action as seen by the chart, with quick reversals and no clear direction in the short term. Choppy price action is normal in June and typically leads to a seasonal correction. However, the long-term outlook remains bullish. Yep, I agree with that. And this correction might emerge as a strong buy signal. We had this Friday where we had a lot of bad data coming out of the US, with when you look at gold, obviously you had a good quote, in quotes, good job report. Again, if you look into the details of that job report, again, what the jobs that were added were part-time jobs, and they actually lost 250,000 full-time jobs. So I don't know why that is good. But anyways, looking at it here, this is short-term. Looking at it long-term, we have broken the 4-year base. We have an inverted head and shoulders target of roughly 2,650, if I remember correctly. So we have some time to go still. And I don't think 2,650 is the top by any means, but that is the first big target. I do think we will reach 3,000 here within a year or so, depending on various things, obviously. But here we have, this is not a chart. Usually I only have charts, but this I really like here from tin here. Gold is trading well above 2K without any resistance of the great rotation. The 2020 market marked the end of a 4-year debt cycle bond bull. The bond market is 10 times larger than the stock market. Inflation is systemic. Bonds will be a perpetual losing investment. Rotation into the metals is coming. Again, I completely agree with this statement here. And here we have him again, tin. Why do I do that? Tin, there it is. Good. Don't downplay what has occurred in the gold to silver ratio. And I will emphasize how important this breakdown is in the gold to silver ratio. We had a false breakout to the upside here from this formation, and then we collapsed down. This is why this is the main reason why I'm so bullish on gold and silver. And platinum, again, platinum needs to turn a bit here again, getting above 1100, but this is the main reason why I am heavily bullish gold and silver. Silver is set to outperform big time gold here, and gold, it will not be the case where gold goes down and silver less. No. Gold goes up and silver more. Again, also what he states here, there has never been simply so gold can drop and silver drops less. It's a bull occurrence, completely correct. As much as the banks try and paint over the obvious, they can't hide the fact that the metal markets has shifted it into bull mode. Everything that he says, in my opinion, is true. And gold and silver metals, again, commodities, will be a great investment from time to time. Obviously not at the same time, but it will quickly rotate between them, but still commodities will be fantastic. Trend spider here, potential ANF, sympathy play brewing here. Again, it's not so much the tick or whatever, but it's just a very clean squeezed volume in the middle. Again, you don't do anything until you break. It's just very clear setup here. I like it. Again, a break to the upside there on the, let's call it the 4th time. Again, then you have a quick move, in my opinion, to the triangle high over here, the gap fill. Just, again, very simple stuff here. You don't need a lot more to play these setups. Beautiful, simple stuff. I like it. Here we have Jesse. The last 3 significant lows for gold futures fell right on the non-farm payrolls. You see non-farm payroll, non-farm payroll, non-farm payroll. Sometimes they do ring a bell to the Fed, the pigs, to feed the pigs, excuse me, fed the pigs, feed the pigs. Ascending W formation still on the way. And if it activates, then we see again that 3K target that we talked about again. We have 3 spikes low, well, 3-ish spikes lower lows here, not perfect. But again, long-term, a bit tricky, long-term and screamingly bullish for gold. Jay Fung here, just a quick shout out to Jay Fung here. One of the earlier guys that I followed, and he hasn't disappointed. He's really good with horizontal lines and Fibonacci's. And again, if you study his charts, again, if you want to learn stuff about, fibs, levels, and all that, follow him. A big shout out to him. I think he deserves a lot more followers than he currently has. Extremely skilled, definitely worth a follow. If you don't agree, you can always unfollow again, but I think you should give him some attention here. Really good guy. Copper here still above the 50% fib, right down here of the overall breakout, I assume, or the bottom of this move up here again. 4.42 is the fib there. I do think, however, that we could see 4.35, which is the major high going back over here. You can't see this on this screenshot, but I do think we will get to that, and then we will resume higher for copper. Also, JFUN here again. Silver lost its 50% fib there, or 0.5 fib. If that sloppy bull flag doesn't confirm Monday, then 28.5 is likely on deck. Lose that, and it's a different conversation. So yeah, this is basically, assume this is gold. I think it's a misspell here. This is actually gold. Gold has lost its. I thought this pattern was different than what I usually remember from silver. So again, here you can see we are below the 50% fib. But again, let's see here again. We could actually come all the way down to the lower side of the bull flag here potentially. Definitely very sketchy here, but this is we are due for a bounce here. Let's see how high we go. But this collapse here, usually you see a retrace. Let's see how high we can go. Just like over here, you have a huge collapse. Hopefully we can spike higher again here again. But the difficult thing is, you collapse, you grind higher in a bear flag, you go further down. Again here, grinding, bear flag. So let's see what kind of formation we get here. But I do agree, getting above 2,300 is very important to hold here in the short term at least. Grady. This is clear, historical breakout we are looking for, so it begins silver. So this is a different view on silver versus the SPX, just like we looked at from Patrick, monthly candles. You can see here again, we have the breakout. If you take the closing highs on the monthly, we have a breakout. Maybe even if we also take the wicks, I do assume we have broken out, retested it there. So again, still early. Still have a lot of, worry to climb, but definitely silver. I think I'm very confident in that it is the better play. It really is, especially the miners. We have been buying some miners here lately that has done very well. Yes, they're pulling back now, but hey, nothing goes in a straight line. Grady again here. The move in precious metals miners have just begun. Speaking of miners, by the way, the chart are now set up to climb the right side of this huge arc going back 15 years roughly. A rounded bottom cops. Most will not get into the bullish mindset until it's too late. Do everything you can now to prepare mentally for what's coming. So I agree here. Huge rounding bottom, huge cup here, going close to the upper here, in my opinion, where we will stall, pull back for maybe a few years. Just like we saw on gold, we had this 3 to 4 year long handle. Same thing will apply here, in my opinion. And yeah, this is the GDXJ gold miners juniors. They still have the ETF still have 200% to the upside before reaching the highs. And if you can pick the right individual stocks as well, you will see a lot more than 200%. You will see 10x easily. Again, it comes with volatility, so you got to prepare yourself for that kind of thing. Transpider here again. Uncle Warren looks ready to rip. This is the Berkshire Hathaway. Same thing again as we looked at before from Transpider with the setup here. Just very simple. 1, 2, 3, actually 5 times here at the top. I would be very surprised if this does not break out and at least reach the triangle high here, and I think actually beyond. Very strong setup here. Again, very simple, chart here, but again, simplicity is the best. It really is. A cigar here with silver annual candles. I love the visuals here. It's beautiful. History doesn't repeat itself, but it often rhymes. With a 40-year cup and handle in the mix, you can see here again, we have the cup, we have the handle. This is, I assume this, what is this? This is quarterly? I think it's quarterly candles here. Again, you can see here we have made the big breakout. And yes, we're going to 50. For sure, not in a straight line. It will be heavily volatile due to the shorting, rips to the upside, again, shorting into the rips and all that. It will be one for the books. But I'm definitely sure and positive that ever since we broke 26 this time around, that was the big go-go sign here. Again, it points to, in his case here, $200. I think that's maybe a tiny bit to the low side if you were to measure it differently. But hey, we have a lot of upside. That's that we can both agree on. Finding value finance, my good man Andy here, for the sake of Americans, the resistance line better hold. That's very well put, by the way. This is also a ratio, a chart that I've been posted it many, many times. Gold divided by inflation. Why is that important? Because if gold really starts to break out of this 50 year long trend line, that means that gold is now probably one of the best assets to be invested into, because it will outperform finally big time on a long-term time scale inflation. And in that case, I also assume that gold is a much better investment than bonds in that case, obviously, because it's outperforming inflation, therefore the inverse. But anyways, gold here looks ready to rip. By the way, try to take this chart here on a Renko. Very interesting stuff there. So yeah, Andy, I need to talk to Andy again. It's been some time. That's it, guys. Have a great day. Again, follow these guys on Twitter. They are really, really good at what they do. And also, if you feel like it, check out the Substack that I have more or less just started up here. Have a great day, guys. A great Sunday wherever you are. Stay safe. Bye.